Kia ora team, Claire here from My Mortgage, and today I want to talk about builds, and I want to talk about the difference between fixed price builds and turnkey builds because they are quite different from a lending perspective and also from a building perspective as well. So firstly, let's talk about turnkeys because they're pretty simple. Turnkeys are treated from a bank perspective as any existing property would be. However, there's generally a period of time between the time that you sign up the property and the time that you might take it over, or you might have a settlement date. So other than that, very similar to an existing property. So the same as buying a property down the road that's been in place for 25 years or something. A fixed price build is slightly different, and that is generally when you purchase the land off the developer or the builder sometimes, and then you have a contract with that builder to build for a certain amount of money. So let's say that's $500,000. That build price will be split up into progress payments. So you'll pay for the section to start off with, there might be a loan for that, and then you'll be paying progress payments as those milestones of your build get completed. So the reason that this is different to a turnkey and treated differently is because that price may change, and the evidence the banks have seen over the last couple of years as we've had material costs and things like that increase is that those overruns have been significant. So what that means from a lending perspective is that the banks will generally add between 10 and 20% to the overall build cost to make sure that you could afford any overruns. So again, if we go back to our $500,000 build example, they might be looking at anywhere from 50 to 70k in potential overruns. So obviously that's quite a bit more lending, and it's no guarantee that you'll be able to borrow that amount, but they factor it in, and that is why the affordability can change when it comes to turnkey builds versus fixed price. How this now plays out from a builder's perspective is that it's quite tricky to get development finance to build a complete property without the buyer actually contributing anything other than a 10% deposit or even a 5% deposit in some cases. So those properties therefore need to price in an amount to let the builder borrow that money to build that property. So therefore they can be a bit more expensive. So talk to your builder about what's possible. In some cases, your bank may say, hey, turnkey is the option for you. They may be able to offer a fixed price build, but it could be for a lower amount. So they may drop the amount that they could lend if it's going to be for a fixed price build, which is fine. You can then look at whether or not that also fits into your budget. But that is the key difference. And then the deposit requirement might also make a difference for you. So say if you have a 10% deposit overall versus a 20% deposit overall, that will also change what's affordable for you. So because there are quite a range of differences here, talk to us about what is the right option for you, ideally before you go and see a builder, so we can be really clear about what's possible for you for every different type of build. If you're a builder, talk to us about how we can get your clients in a position to be making offers and signing up build contracts so that we can get more properties built and everybody's happy. So if you do want to talk to us about this, go to mymortgage.co.nz/contact and you'll be able to jump on and book a call with one of us to talk about your build. Talk soon.